today's stream. Thursday already. What is happening today? We're talking about managing cash flow fluctuations with business credit. Business credit. That's Credit Suite's favorite topic. So I'm Carl Peterson. I'm Credit Suite's content and social media lead. And as always, I'm absolutely thrilled to be here with you today and every other time I get to join you. If you're a business owner, then you are well aware that cash flow is the absolute lifeblood of any business. And today we're going to be deep diving into how business credit can actually help manage those ebbs and flows that every single I cannot stress that enough. Every single business experiences. One of the best parts about business credit is having it by your side through the ups and the downs. When you're up, you can lean into business credit to invest in new technology and expand your staff and do marketing efforts. That list can go on forever and ever and ever. And when you're down, it can take an entirely different new shape, helping you take, pressures off of cash flow and continuing to buy things like inventory and just basically having that safety net that you can depend on. And the same applies. That list can go on forever and ever and ever for why business credit works when you're up and when you're down. It works throughout the entire process of ebbs and flows. But today's main focus is actually helping you walk away from the short amount of time that we have today in this virtual space to have a deeper understanding into how much of a superpower business credit actually is in times of uncertainty, which every single business goes through. It's just simply unavoidable. But before we dive into that and everything we have planned for today, quick reminder, we are live, which means if you say hello, I'll say hello back. Isn't that cool? So tell me your business name in chat, where you're located, and anything else you want to say, and I'll read it out loud and I'll say hello to you. That is literally my very favorite part of doing these streams. So don't leave me hanging, and I'll keep an eye on chat. We already have Mike South. Mike is always in these. Mike, it's good to see you. Hello from STL. Hey, Mike, good to see you coming over from YouTube. Hope you're having a wonderful Thursday. So first, let's talk about cash flow fluctuations, okay? So every business, again, I cannot reiterate this enough, regardless of the size, regardless of the industry, regardless of anything and everything that goes into being a business owner, you will experience periods where cash flow is just simply uneven. It's a normal part of running a business. And these fluctuations can be caused for several reasons. One may be seasonal variation. So many businesses, especially those in like retail and hospitality, experience significant fluctuations due to that seasonal demand. For example, a toy store may see a surge in sales during the holiday season, but experience a bit of a lull in the summer months. Another reason that you might experience cash flow fluctuations might just be simply changes in customer demand. So, market trends and economic conditions and just changes in customer preferences can lead to those unexpected drops or increases in demand. Every time I talk about the change in customer demand, I cannot help but think about fidget spinners. Do you know about fidget spinners? Do you remember them? You probably have like 6 of them laying around your house if you have kids. So like 5 to 7 years ago, retail stores were buying them in truckloads, literally just truckloads full of fidget spinners. And the trend completely died in about 6 months to a year. And these businesses were practically stuck with thousands of fidget spinners in their warehouse. If you're a Walmart or a Best Buy type of place, you may not even notice, of course. But if you're a small to medium business, like most businesses are in the United States, like you likely are as well, then there's a lot more risk because that customer demand dried up. It happens all the time. Fidget spinners is the first thing that came to my mind. I'm sure something came to your mind too. Another thing is late payments. So customers or clients paying late can create cash flow issues. So even if you have a steady stream of work, and income, those delayed payments can put a strand on your finances. That obviously, that seems obvious. That seems obvious, but it's just very much it's worth mentioning in this list because so many can relate. Another reason is unexpected expenses. So unplanned expenses such as equipment repairs or emergency purchases can just absolutely obliterate your cash flow. So understanding these kind of initial causes, these common causes, is pretty much the first step in managing these cash flow fluctuations, being aware of it instead of running from it, because it is unavoidable. Whether yours is the unexpected expenses or the late payments, whatever your thing might be, it will happen. And that is kind of the first step into all of this, understanding and not running from it, but preparing. Now, let's get into how business credit can actually be an effective tool into smoothing those fluctuations out. We got Dexter coming over from YouTube, Caesars Transport in Lexington, South Carolina. My name's Dexter. Dexter, it's so nice to have you here. And hey, if you're just coming in, say hello to me in chat. Drop your business name, where you're located, and I'll say hello back, give you a little shout out here. So let's talk about business credit, understanding business credit. So business credit is just simply one of the most powerful tools that a business can have. It's that simple. I'm not over exaggerating. I'm not saying that for the flair of it. I am being completely accurate when I tell you that. It can provide businesses direct access to funds that can be used to cover these short-term cash flow gaps, right? So the three most common types of business credit are, let's start with business credit cards. So they can be quick and flexible and a really great way to manage cash flow issues, especially for kind of the smaller issues. And business credit cards also often come with perks such as cash back, rewards, or travel points, and discounts on business related purchases. And obviously, none of that costs extra. It's just included in the card itself. It's also a great hack to use when wanting to build your business credit really, really fast. Whatever platform you're watching us on right now, we have just tons, unlimited. It'll take you years to watch amount of content that covers that very topic in detail. So business credit starts that list off for us for sure. Business credit cards start that list off. Next is lines of credit, business lines of credit. So a business line of credit is just a revolving loan that provides access to a fixed amount of capital. So one of the largest perks to this is actually being able to draw from it as you need and only pay interest on that amount used. So this is ideal for managing that seasonal cash flow fluctuation or handling those unexpected expenses. And then the third thing I want to list off is just simply business loans, right? And these are surely you probably either have one or you've heard of one or you've applied for one. I'm not telling you anything new, but business loans is absolutely third on the list because it is one of the most common types. And these are for more substantial sums of money, right? So borrowing for like specific purposes like expansion or large purchase like hiring a whole new staff for a new location. They're not as flexible as lines of credit, but they absolutely can provide that significant financial support when needed. But these are only the three common forms, right? So before we move on, you just simply have to know about one of my favorite free guides that we offer here at Credit Suite, completely free. It discusses 27 different types of funding that you can use for your business in detail. So we just went over three you've probably heard of. The cool part is there's tons, and this guide will go over that. So some you've heard of, some you may never have, but regardless, it's information that I believe every single business owner deserves to know. And that's why it was created. You can download that at creditsuite.com/27, the number 27. In just a second, that'll drop in chat. So simply click that link and that will give you that free download. So understanding these options is the first step in leveraging business credit. Now, let's dive a little bit deeper into the benefits of actually using business credit. So, starting off, we have flexibility right away. So, business credit offers flexibility in terms of how and when to use the funds. We just went over that a little bit. Next is managing operations. So, it ensures that you can actually maintain your day to day operations without any sort of interruptions, even when cash flow is tight. That's a huge one, right? So this is crucial for paying suppliers and employees and other just day-to-day operational costs that you know and love, just simply unavoidable, that are going to be there regardless of if you're in the ebb or in the flow part of the ebb and flow. But by having access to business credit, you can absolutely avoid delays in your operations and keep your business running smoothly. Next is building credit worthiness. Touched on this briefly a moment ago, but regardless, regular use and timely repayment of business credit can absolutely help build your business's credit score, making it way, way, way easier to obtain financing in the future, and also, opens the doors to better loan terms and higher credit limits and lower interest rates. These are all great things that you'll want. So that's another benefit as well. Next is separation of personal and business finances. This one is huge. It's massive. Business credit helps keep your personal and business finances separate. We call this financial checkmate. When we talk about this topic, we often mention the word or the term financial checkmate, because using personal credit and finances may work today, but one day you will run out likely and be forced to make a decision, such as possibly even shutting your doors. So prevent that when you're able to prevent that. Separate your personal and business finances. So now that we understand some of the general benefits, let's talk about how to actually effectively use business credit to manage cash flow, the main topic of today. So first and foremost, you should be able to use it to plan ahead. So you can anticipate periods of low cash flow and apply for credit before you actually need it. This ensures you actually have the access to those funds when you need it, right? When it's necessary. For example, if you know your business has a slow season, secure a line of credit now in advance to cover those expenses during that period. We often say it's not, it's not it's going to happen, right? I was the phrase escaped me, but it's going to happen. It's going to happen, and you need to do it today to make sure that you're covering your business and yourself. Next is monitoring cash flow. You should always keep an eye on this, always, obviously, especially during those times of the unexpected. You should also just always pay on time. Just always, forever pay on time when you can. Again, another thing that sounds super obvious, but don't overlook it because it's so simple on the surface. Ensure that these timely repayments of your lines of credit are taken care of to actually avoid high interest costs and actually maintain that good business credit score. And also, you want to maintain a good relationship with lenders. We just talked about this with Ty Crandall on Tuesday's live stream a few days ago. It was all about this very topic. But having a good relationship with your lenders can absolutely make it way, way, way easier to actually negotiate those terms and access additional credit if needed. You want to make sure that you're regularly communicating with your lender about those business needs and financial situations. It happens, and a simple phone call or email or office visit to them can go a very, very, very long way. Next, you want to diversify your credit sources, right? So, relying on a single source of credit can be done. Obviously, you can go your whole business life only depending on one, but can obviously be risky if it's not done correctly. So you want to diversify your actual sources of funds by using a combination of credit cards and lines of credit and loans, or one of the many 27 ways that were just dropped in that link a few moments ago. So you got to do that, because this way you can manage cash flow way more effectively and actually have multiple options available right at your fingertips when you need it. And last, you got to review your credit options regularly. So the financial market is changing practically daily, it feels like sometimes, and new credit options may become available to you. So you want to regularly review your credit options and actually consider refinancing or negotiating better terms or opening up a new line of credit when that makes sense. You always got to keep a pulse check on that. And lastly, you gotta with managing cash flow with business credit, you gotta just to kind of reiterate what I just said, you gotta make adjustments. You gotta monitor. Let's dive a little bit deeper into that though. I want to close with a few steps in mind. Okay, so first off, you want to regularly review your finances. So conduct just thorough reviews to assess your cash flow and expenses and just overall financial health, and use these reviews to identify any kind of potential issues and make those adjustments as needed. Then you want to actually, constantly be adjusting your credit usage. So then, based on your financial review, adjust the use of your business credit as needed. So this could involve increasing your credit limit or paying down balances or exploring new credit options. Not an accountant, not anything like that, just giving you general advice here, but this is typically what we see people do. Also, don't forget to stay informed. Keep up to date with changes in the financial market and new credit products that may be beneficial for your business. We just touched on that a second ago. And then also, lastly, but very much not least, is create a feedback loop. So this continuous improvement process can help you stay just frankly ahead of cash flow issues by being able to spot them very, very, very early on. And this feedback loop is extremely useful for many reasons. It doesn't even have to be financial, it could just be the way you conduct your business. Feedback loops are great. Credit Suite uses the feedback loop as one of our main fundamental values when it comes to day to day work. It works. Don't skip over it, especially when it comes to finances. And with that, that is today's stream for you. Make sure you want to visit creditsuite.com/consult for a free consultation with our team of experts. What I'm going to do is I'm going to throw this up here. I'm going to throw up where is it? There it is. There's a QR code for you to scan. And also there'll be a link dropped in chat as well with that. You can just very quickly scan that QR code or click the link in the chat for a completely free consultation with our team of experts. We have helped over 50,000 business owners, and we actually just celebrated our 10-year anniversary last month. We know what we're doing, and we are very, very, very excited to add you to that growing list of businesses that we can say we played a part in helping one way or another. So reach out at creditsuite.com/consult to get started now. Also, please don't forget to like, please don't forget to subscribe on whatever platform you're watching on right now. Look, we post content practically daily and we have these live streams twice a week. So liking or subscribing to our page right now means you do not miss a chance of losing a lot of free value in your news feeds. Seems like a pretty sweet deal to me. I hope that you all have a fantastic rest of your week and weekend, and we look forward to seeing you again in just a few days on Tuesday for our next live stream.